Welcome to Markets Now. I'm Michelle Rook along with Ken Beadle with Paradigm Futures, and we're seeing livestock futures kind of leaning to the plus side here as we go through the mid-session. And we've been mostly lower over in the grain trade with the exception of spring wheat. And Kent, let's talk about some of the pressure that we're seeing in the grain complex. First of all, in soybeans, boy, a big drag in the soybean oil market, and that has really pulled down soybeans. Meals also lower. That doesn't help, does it?
Yeah, it's being led by the soybean oil. There's little doubt about it. The reasons seem to be a little bit nebulous at this point in time. It could well be issues with the RFS and worries about the debt ceiling and things that might happen legislatively. We have palm oil lower, and obviously we had lower production for a number of years based on La Nina, and of course things are changing there. And we've got, just a lot of speculative interest on the short side of all of these markets, and that's been driving things lower as well. Of course, we've got crop progress, and we're ahead in soybean planting and corn planting as well.
Right.
It's just been a lot of things, one on top of the other, that seem to be pressing down on markets here today.
You bet. I would agree with you. 2-year low in soybean oil certainly doesn't help. And we've had basically the global veg oil sector has all imploded here, hasn't it, recently?
Yeah. Like I say, palm oil, probably looking at, increased canola acres and a good canola crop in Canada. At least that's what the early expectations are. Nobody seems to care much about, sunflower production out of Ukraine at this point in time. We have heard that actually oilseed acreage could be up and corn acreage down in Ukraine, but you just have to wonder about production prospects at all. Right now, the market doesn't care about that.
So you mentioned the fast planting pace, and we're ahead of average in the corn and soybean belt in every place except for the Northern Plains. North Dakota is still in trouble. Minnesota is a little bit behind. But when you look at us compared to last year, it isn't that far behind. So what are you thinking? Are those acres going to get planted? And does the market even care about that at this point?
Well, right now, clearly the market doesn't care about it. I'm going to separate out Minnesota and North Dakota. I believe that the crop's going to get planted in Minnesota. Clients are telling me that they're making good progress. I think they're even making progress in the Red River Valley, especially on the Minnesota side. There was less moisture in the last system that came through. In North Dakota, we're essentially equal to last year's progress in both corn and soybeans. And of course, last year we had a fair amount of prevent plant in that state. And while the temperatures are higher and going to be, quite warm over the next couple of weeks, we do have a planting date of, I believe, the 25th of May, staring us in the face. That's 10 days away. And, honestly, you can only go so fast. And I do think that there's a lot of incentive to take PP if you can. And I think farmers may avail themselves of that opportunity if that happens, given the low price structure that we currently have for corn.
Right. So when you take into consideration the fast planting pace and most of the corn belt being ahead of the 5-year averages and what we got out of the WASDE report for new crop estimates, the perception here is that we're going to have a big crop. And so where do you think price levels need to be at in corn and soybeans? I mean, we're making new lows for the move today in the December corn. So at least we're maybe trying to price some of that in, or what?
Well, we certainly are trying to price some of that in. And, the question is at what point are you fully priced in? It sort of felt as though the way we traded last week, we really didn't go down much after the report was released, and then recovered on Monday. Felt like it was fully priced in. Today, I think we're getting another big spate of speculative selling, again led by what's going on in soybean oil. But how low can we go? Keep in mind that the American farmer essentially has a put option from the revenue insurance program against trendline yields. And at 85%, we are at that level. That's at 502. It's at 573 for 80% coverage in corn. And this early in the season, we have not traded below that 80% level. Later on in the season, we can trade underneath those levels when, if and when we want to price in full trend line to maybe above trend line crops. But at the moment, I think we're in the neighborhood of probably being cheap enough. It's just a question of how much speculative selling we're going to continue to get, because the American farmer is not likely to sell much at these lower levels, given the put that he has from the insurance program.
No doubt. The wheat market, are we just seeing some profit taking in Kansas City and Chicago wheat? And if we get some confirmation in the Kansas wheat crop tour of the smaller crop, will it be a buy the rumor, sell the fact or not?
Well, it feels still kind of range bound to me. I mean, you think about last week's rally, all it did is take us to the top end of the range. So we did have some support even after yesterday's rally or resistance, excuse me, just above the market here. Honestly, I think it is profit taking. I think it's being, led by the weakness in the corn and the soybeans. Still wasn't particularly impressed with the crop condition rating in Kansas City yesterday, but it was, clearly we saw some acres come out of the poor and very poor into the fair category, and so it at least did show some improvement. I think that the report from the tours is definitely going to be key, and everybody's going to be watching the Twitterverse to see what sort of prospects there are out there when they take a look at it. But my guess is that we're going to be range bound here for a little while, unless the tour actually not only verifies the USDA estimates, but maybe even comes in a little lower. Then we could probably go and make some new highs.
Yeah, I think abandonment, the level of abandonment they have there is probably going to be the key. And we should point out the resistance you're talking about here in HRW wheat is right around that $9 level, right?
Yes. Yeah.
Right.
And, even number, it's certainly going to bring some selling for those growers who are fortunate enough to have wheat in the, in that good to excellent category, which isn't even a third of the crop.
Gotcha. Okay, cattle market, a little two-sided early on, but we've held together very well. Do you think this market is trying to price in a little bit better cash trade this week, or what's going on?
Well, we're kind of looking for a steady cash trade this week. Just the fact that it may not be lower, early indications that steady probably, make the market feel a little better. Certainly, we had a better week last week, and you still have these strong underlying fundamentals that tell us that, longer term, the situation in cattle is still bullish. So I think what you're in is a situation where when you have some weakness, it's likely to be well supported by the trade.
Gotcha. Hog market, what do you think there? We're looking at another higher day here today, but is that just short covering, trying to correct the oversold status, or is the market finally sensing that seasonally this cash trade is bottoming?
Well, the market is going to be watching cash trade very closely every single day, because we've had this situation where we're anticipating better cash numbers. When we get better cash numbers, the market reacts to it. But you need to see better cash numbers on a sustained basis, right? So as you get these mid-morning and then your afternoon runs on the cash, it's going to be very important for us to be able to continue the rally. My sense is that you're going to find an awful lot of hog producers are going to be willing to start to hedge summer hogs again as you get up toward and approach $90 in the summer months, and if you would get the winter months back up toward $80, I think that becomes an opportunity as well.
Okay. I was going to ask you how far we were going to push this and sustain this rally, but you just answered that with where you think we're going to hit resistance. Okay. Thanks so much for joining us, Kent Beadle with Paradigm Futures, and that is Markets Now.